And we're live.
Good day, everyone. Thank you so much for joining us. Thank you for taking your time. It's a pleasure to have you all here. My name is Nonkululeko Mntambo. I am from the Mandela Institute for Development Studies, working in communications, and it's really nice to finally have the opportunity to host such a poignant conversation, really. As usual, the Society Talks is going to be as initiated by the Southern Africa Trust, the Graca Machel Trust, and the Mandela Institute for Development Studies, and obviously the Center for African Philanthropy and Social Investment, which is CAPSI. Um, the aim of this is to further conversations which are relevant to us and which are not necessarily being had at the level they need to be discussed. The people that are having these conversations very often are in the margins and marginalized themselves. But today we have the opportunity to be joined by people who are great and who are making strides in their respective industries to have the conversations we need to have with the people we need to have them with, the audience we need to have it with, and for the future we want to have. So, what exactly is this great conversation we are having today? We're going to be talking about women in agriculture and how the entire sector, the entire sector is very much an anchoring of African economies. However, there is there's a distinct group of people within that economy who are being ignored, who are being marginalized, and who are not necessarily being enabled to do all that they can, which is at the detriment not only of the people themselves, which are women, um, but also to the detriment of the African economies at large. As we all know, um, farming, farming in the continent takes on a very diverse look in that we are not only surrounded by commercial farms, but a lot of our food and produce comes from more subsistence farming and women who are farming for informal trade. And so, what do we do then with these small scale farmers? What do we do with our subsistence farmers? What do we do with our farmers who are not linked already with with big corporate and big food chains? And also, how do we take care of them during the pandemic? And it's perhaps a slip of the tongue on my part to say them, because them is us, them has always been us. The women in Africa have been upholding the economy for quite some time, not only in the informal sectors within the food industry. In many parts of Africa, you'll see women selling food on the street corners and so on and so forth. But in every sector, really, women have been the fundamental part of the economy. So in sustaining the economy, it is very important that we very intentionally sustain the livelihoods of women. And so, in speaking about sustaining the livelihoods of women, we have to very much, of course, speak about informal trade, and we have to speak about agriculture. And in speaking about that, today our focus is going to be what has this pandemic done in impacting those people? What are the losses we've incurred, and how do we survive it really? How do we move forward? And what does informal trade will look like past this point? Because clearly it can't carry on as it has. So, in that, and not going too much into the detail of it, because of course we have our illustrious guests and panelists who are going to expand more onto that. We are going to go straight into it, and I'm going to introduce your panelists to you. Um, so, for our first panelist, it's Ms. Sharmala Ishwarlall, the Business Development Manager for the Graca Machel Trust. So Ms. Ishwarlall is currently the Business Development of Graca Machel Trust, as stated, serving as an educational directive at the Gauteng Remedial Institute and a seasoned international development aid business specialist. Being in the humanitarian sector for over 25 years, Sharmala is proficient in writing, editing, proposal management, including senior management of operations, non-profit project implementation, business development, community mapping, donor and key stakeholder engagement, financial oversight and operations sustainability, and strategic planning. So I need a breath because I'm not half as qualified. And it's quite a lot. Thank you so much, Ms. Ishwarlall, for joining us. And we look forward to hearing all of these accolades come to work. And then secondly, we also have Ms. Bokang Moathlodi, who is the Business Development Manager for the Southern Africa Trust. She is also a Sustainability Manager for the Southern Africa Trust, and she is most recently an independent consultant focusing on advisory and management consulting for small and micro businesses. She is also an associate consultant for Black Partners, which is a BBBEE enterprise and supply development matching company. Prior to this, Bokang was at Harambee Youth Employment Accelerator, Standard Bank, and L'Oreal South Africa. Her experience includes youth empowerment, business development, and trading, including interest rate derivatives, bond, and forex. Again, losing my way because there's a lot of catching up for me to do on my side. But again, we look most forward to the contributions that you will be making, Ms. Moathlodi. But before we start, just to make a safe place for our amazing, amazing panelists, I am going to be a bit of an enforcer of some house rules. As stated, we are having a conversation, and for us to have a conversation, we must have a safe space. So for everyone watching, we can't wait for your questions. We would love to hear what you have to say. Please contribute on what medium you are writing on, whether you are writing comments on your YouTube or when you see this video, watch it on Facebook or things of that nature. We are going to have a few time limits that we've discussed with our panelists. I've threatened them already, so they won't go over time, we promise. And for everyone who wants to engage, please do so respectfully, but do so definitely, because the most important thing is for us to hear what you have to say as well, since this is a conversation. If I'm not forgetting anything, because yes, I am a bit of a rebel who forgets rules, so I'm just going to jump straight into it. So I'm going to hand over to our first panelist, who's going to be diving deep into our topic for today, what their perspective is, and where we should be going. So I'm going to start with our first panelist from the Graca Machel Trust. If you would join us, Ms. Sharmala. Thank you.
Thank you. Thank you so much for those introductions. Yes, it's quite overwhelming when I hear you speak. So I think I can dive directly into looking at the COVID-19 and the funding landscape. So if we have to look in terms of the current trends pre and post-COVID, there has definitely been a huge shift. So the COVID pandemic, along with the health emergency, has brought with it many struggles, especially for startups, small to medium enterprises. We're looking at organizations that are different levels of establishment, have went through quite a tedious process during this time. Some of them, hundreds of organizations, have even closed due to the COVID-19 pandemic and the funding restrictions that came with it. But also, we've all seen that there has been a drastic fall in revenues and have been struggling to make ends meet. So a lot of the organizations had gone through retrenchments, there have been layoffs, furloughs, and they've all been literally scampering to reduce their cash burns. And it basically became a race for survival overall, globally. So a lot of the organizations started looking at the low-hanging fruits. where could there be opportunities for them to complement their technical niches in terms of operating cost. They very quickly sort of regrouped in terms of their finances to look at their cash burns. They also looked at in terms of their sustainability and how long they're going to be staying open, looking at loans, selling off assets, etc. So it's been quite a stressful period for all organizations and individuals across the globe. At the same point, we've also seen in terms of the COVID-19 funding landscape is that when COVID-19 came about, there was a rapid burst of opportunities more towards the wash industry, more towards the wash sector. So wash is water and sanitation and hygiene. So it made complete sense because funders, donors wanted to see a rapid scale up of this kind of activities because of COVID-19, of how to keep people safe, how to keep communities safe, and also looking at existing projects and how that can be modified and scaled up quickly in terms of the COVID-19. So we saw a lot of organizations trying to regroup and trying to apply for these kind of submissions. Also, what was interesting to see is that organizations that was not necessarily in the wash sector started applying for this and reinventing and evolving to remain relevant. So that was quite interesting to see their sustainability plans. They quickly shifted gears to see how they're going to move forward. And then we saw the funding landscape changing again. Whereas now the donors were opening it up a little bit more because when COVID hit, we saw funding opportunities were frozen, either withdrawn, there was no bidding. So it was quite a turmoil time during that particular landscape. So there was a lot of uncertainty of what was going to be happening. The forecast wasn't clear, so organizations could not project. So in hindsight, there was a lot of uncertainty in terms of, are they going to be open for the next 6 months, for the next year, and how they're going to maintain their operations and staff during that time. But slowly, as things have started to, I won't say normalize, but people starting to adhere to the rules and regulations of COVID, and we're seeing that organizations were now actually trying to put remedies in place of how to keep people safe and work in that different space. We're then now seeing opportunities coming out more for overseas key populations, women, and so forth. So what was also interesting and good to see in terms of the grant landscape during COVID and is that a lot of the grants was also working towards internal capacity building, helping organizations to build stronger mechanisms and put in place capacity for building support. So during this time of recession, there are often times of heightened restructuring that may ultimately lead to a stronger and more resilient economy. So this is where organizations need to take advantage of that particular opportunity. And as we go further into discussions, you know, there's a famous saying that goes, never waste a crisis opportunity. So there's always something that can come out of it. So I will pause at that point before we go into the other discussions. But clearly the landscape has changed. Donors have re-looked at what they're funding. They want return on investment. They need security. It also needs to be a safe space for them. And when we talk about impact investment, it's definitely lucrative. It's a win-win situation. Thank you.
Thank you, Ms. Sharmala. Thank you on mute and off mute. I'll open the floor for Ms. Bokang to maybe give us her contribution as well.
Thank you. I think there's not much to add because of how much Sharmala covered. But one thing that I just want to piece into is the idea of organizations pivoting because of the donor landscape changing. And, you know, it's such an important ability of any organization to be able to shapeshift in their economic context, in their social context. And at the Trust, it's been something that we've been doing as well. And it's been such a struggle because of, you know, when you're forced to change, you start to realize some of the things that were deeply embedded in the organization. And so it's about, learning and unlearning, The other element that also sort of intensified the pressures of this time was around remote working. So not only are you having to shapeshift, but you're also having to do it in an isolated space. So issues around leadership, issues around team building become more heightened because of the pressures that come with physical distancing. And so, the practical elements of being able to shift, given the pressures of this time, are really burdensome, in terms of organizational health, are really challenging in terms of organizational design. And so by the time we get to a point where we're able to sort of catch our breath, we realize that we have morphed into or evolved into organizations that when these organizations were being conceived, that they never thought that they would end up in this place. But also because of the contraction in the donor landscape, what's happening is that there's a lot of sort of a marketization of the work that's done in the development sector. And so to Sharmala's point earlier is that some of the competencies that you observe as an organization, you start to see that, well, they have a for-profit space in which we can generate alternative income. And so issues around fund diversification become heightened also in this time, because the funds that were allocated to your program are now being prioritized for health, prioritized for the disruptions that we saw in education. And so in that as well, you're experiencing that sort of tension of being able to cope with the external pressures, but also live up to the mandate with which the organization was conceived. So, so the external factors are loud, are well reported, but the internal mechanisms to respond to those external pressures has also been characteristic of this time.
Thank you. Thank you so much. And I think that both of your contributions speak to a lot of what we want to be discussing, right? In terms of, just going seamlessly into our next question, which you guys both mentioned that the traditional donor space has been either fatigued or is disappearing, or there's a lot of things that are not going as they used to in the typical donor space. So now there's more creative ways that organization needs to go into acquiring funds, right? And so for my next question, I guess I would be asking, okay, so impact investments. One, for the purposes of our audience, just to introduce the topic, what is impact investment? It's not the norm, yes, but is it a form that we ought to be exploring at this time?
Absolutely. So when we look at impact investing, when you mentioned it's not the norm, that is absolutely correct. But it is a new trend that organizations are starting to leverage off and starting to hook onto. It has always been there, but it's not a concept that has been widely spread or being educated, especially when we look at women in agribusiness. 62% of economically active women are in agribusiness, but the gap actually gets smaller when you look at women in rural areas. And the disparity when we unpack that is that in terms of men and women, in terms of productivity and also the earnings, because women do not have that access when it comes to education and it comes to finance and the knowledge of how to do this. And that all ties in nicely when you look at impact investment. So in order for these organizations or individuals on different sectors and different spheres to be able to access that kind of portfolios, it's very important to understand that this is different from your traditional grants. provided by a donor. As the money is repayable, it's investments, and there needs to be a return on income. So it's a different from a commercial investment. It's looking at creating a positive social environment impact, and also there needs to be a financial return. So like I mentioned, in hindsight, when we look at these kind of opportunities for CSOs, it is quite lucrative. But in order for them to actually aggressively go after that, they need finance, which needs to be coupled with the education that goes with it. Those two are the most critical ingredients and goes hand in hand for them to understand this package of impact investing. And so when we look at the donor sector, the private sector, and how all of this is packaged, it's very, very important to actually note that we would want organizations to be linked to high value markets. They need to be accessible to financial resources, to have these kind of tools and business training, business mentorship, access to loans, to business models. And when we look at all of that in holistically, it actually will unpack and is the undertone for impact investing, and for them to be successful to embark on that kind of journey as well. This is a very lucrative and one of the opportunities that CSOs should tap into. It is available. They should also be quite familiar in terms of who these kind of donors are, the stakeholders, and with, what Monica has also mentioned prior was our current challenges with digital technology during COVID. And what we had seen is that CSOs, along with other organizations, including the private sector, we have many handicaps. And one of the handicaps that was actually brought and was highlighted was our exposure to digital technology. So again, looking at impact investments, one of the things that's going to drive CSOs and to be in the front line of that is actually leveraging digital technology innovations and looking at business models, using best practices from other sectors like business, education, especially in the finance sector. And how can we use that and bring that over into agribusiness? So we don't want to work in silos. Also looking, when we talk about impact investment, what is very important, talking to CSOs and organizations in this field, is that they have a desire to be acknowledged and to be accepted in wanting to use a human-centered design. They want to be part of the project. They want to be part of the design. They want to seek opportunities as entrepreneurs, to wanting to sell a portion of their production to markets. So that has a lot of barriers when we look at small-scale productions. So we're looking at wanting to improve productivity, we're looking at profitability and income, and that all is part of small farming solutions. That goes full circle again to impact investments. So this is kind of a new playground that we're also tapping into, but there's a lot of resources. But in order for it to be successful, for a CSO to be successful, especially women in rural areas, they need to have access to all these business tools, business models, to resources, digital technology, fertilizer, capital loans, farming, land, and so forth. I'll stop there and hand over to my colleague and chime in once she's done. Thank you.
Thank you. Bokang, we're ready for you.
Yeah, I think, the analogy that I like to use around impact investing is that imagine that you are a farmer who is producing spinach. So in order for you to produce spinach, you need land, right? And that land has a value, not just of itself, but because you are able to produce spinach on that land, right? So that's one layer. The second layer is that the people who work on the land are well compensated. There's job security, there's education for them to develop their skills, and there's a healthy environment, and that they have secure shelter, right? And that's an ethical sort of farm owner who's treating their employees well. and is farming in environmentally sound mechanisms in terms of water management, in terms of the use of fertilizers, and even in terms of their supply chain as well for agricultural inputs. They are using the ethical methods of procuring those inputs. And so overall, when you look at this farmer, right, you're able to then determine the value of their produce because they're able to sell it. There's a price of the spinach, and also that they pay the employees well, and they farm in ecologically sound methods. So that becomes a farmer who is ideal for an impact investor, because on the ESG scores, they rate well, and they've got a viable product that they're able to sell. So their social returns, and the fact that the spinach is viable, there's also solid financial returns. The challenge, though, is that what happens when the price of spinach goes down, right? It starts to put pressure on the cost containment of the farmer. And it starts to put pressure on their wage bill. It starts to put pressure on the affordability of the inputs. It starts to put pressure on being able to generate the social and financial returns that previously, when they started, they were able to generate. So when we talk about impact investing, how do we then ensure that the capital that we invest in this farmer protects the workers, helps them to continue to farm in ecologically sound ways, but also that in this time, because produce, the price fluctuates, that in this time that the produce is at a level that is too little to cover all the costs, what kind of mechanisms can we put in place so that they be able to sort of overcome this price dip, right? Is it a subsidy from government? Is it a loan with flexible terms from a bank? Is it, equity where a friend or a more noble person in the community is able to invest, get a share of that land? Or is it a grant, right? So those are some of the avenues that become available for this farmer. And all of these, because of the social return, are able to be determined as impact investment. And so that's how I sort of describe what impact investment is. And so one of the things that become critical then for farmers especially is that how do they position themselves to be able to secure those avenues of finance? So from a subsidy point of view, because it's a policy sort of response, are they advocating for or participating or involved in organizations where they're advocating for subsidies and or rather an enabling environment in order to enjoy those benefits when the market dips, right? In terms of loans, are you engaging, are you reporting in a way that anyone who wants to borrow you money can be assured that you're able to pay them back, right? And here we have issues around collateral and what happens if I'm able to pay them back? How do I prove that I will be able to pay them back at a certain time, and so on? So those issues start to creep up there. And that's where the CSOs are able to then come in and be able to support these farmers in order to be able to verify them as credible, as legitimate, but also provide, we'll call it not a financial collateral, but provide sort of a guarantee to say, we know this farmer, we're able to, we're able to vouch for them. And so we know that when they say that they'll be able to make this produce at this time and sell it at this level, that they mean they do so. Governments do that all the time. Government does it with ESCOM. And so even in our context, we're able to provide that for farmers. So, and again, when you then go into sort of someone wanting to buy a stake in your farm and what have you, is that now being able to understand that how is my farm valued? Why is my farm worth $5 million and another farm is worth only $2 million? And so being able to, as Sharmala said, being able to understand what that means and what that looks like for your prospects as a farmer. And so, and similarly so with a grant, we know in terms of the due diligence that is done by CSOs or re-grant makers on being able to identify that is this farmer a credible person that we can trust and that we can work with and ensure that the social returns that we are after we're able to achieve. And so at each of these layers, you're then sort of, as CSOs, as advocacy organizations, and that we are then sort of seeing the opportunity where we can better support the farmer to be able to sustain the high social return that they're generating from running their farm. And so those are some of the ways that I think that in sort of practical ways that we can start exploring with greater rigor on how exactly, or what does it mean practically for CSOs, NGOs, for venture capitalists, for just high net worth individuals, in practical ways, how they can support smallholder farmers to be able to scale. Now, the other challenge that Sharmala speaks to is around the digital inclusion, right? That digital inclusion is important because we want to be able to capture data about what is happening within the smallholder farmer sector. That data is to be able to build insights and is able to build research that then feeds into what are the storage demands, for instance, for smallholder farmers that are different from commercial farmers, is an opportunity then to provide a business that supports smallholder farmers in terms of storage. But we won't know that if we're not able to capture the data. And so it becomes an issue around, not only are we capturing the data to be able to be better at running the business, but also being able to access other opportunities that are revealed from that data. The last thing also then, it becomes that not only is it an issue of just being able to have digital access, but digital poverty is also about being able to access the right tools, right? And so those are some of the opportunities also for CSOs to contribute to ensure that not only are our smallholder farmers digitized, but also that they are empowered with the digital access that they gain.
Thank you so much. I think, I think we're on a very good way. It just in terms of bringing everyone into the conversation, and thank you for breaking it down for everyone to understand. And so now, from understanding what this is and understanding the impact that it has, as Sharmala says, that even though it is not the norm, it is definitely where we ought to be going, right? And also understanding from your analogy of the farm, Bokang, that currently our proverbial farm is facing the pandemic, right? We're all within COVID-19. It's inescapable. So in creating this post-COVID society or surviving COVID society, what would be both of your thoughts on impact investment being directed in that regard, the impact itself being recovery from the pandemic? Bokang, if you could start us off, since you were the last person, and then we'll jump into Sharmala.
I was enjoying our sequence with Sharmala first. Yeah, but go ahead, please.
Are you sure? I can jump in if you would like.
Please go ahead.
Okay. Okay. So that's actually a good question and a good conversation point when we talk about recovery and reconstruction. And I was actually thinking about that quite a lot before this webinar, when we speak of recovery and reconstruction. But we have actually been in this phase pre-COVID as well. This is not something new to us. So recovery and reconstruction is ongoing in this particular sector, especially when we're trying to close this gap, when we're trying to create more opportunities, and we're trying for resources and for organizations to be more visible. And we're looking at right down to the granular level of how individuals that are in this particular sector of agribusiness can reach their potential, can access these kind of platforms. So again, this is not this is not a new mind shift for us. We are shifting the space, we are shifting our positioning just because of COVID. And this is why we're saying, and so I'm saying there's always a silver lining when we say that never waste a crisis, we never waste an opportunity, because this particular situation has forced us to rethink how we do things. It has forced us to relook at how we do business and how we attract new business. It has forced us basically to go into reset for the globally and how we're going to move forward on a new slate. So the reconstruction or the new construction of this whole COVID landscape in terms of agribusiness would have to come right down to that granular level, as Bokang has also explained with the whole analogy of the spinach farm. So once the investment, the impact investment, investors, donors, private stakeholders, organizations, including government, realizes that they need to be more hands-on. CSOs needs to be more visible. They need to be more vocal. They need to show that there is impact on the work that they're doing. It is measurable. There's in terms of their M&E, they are on a digital platform, which is very, very critical at this stage in time. And they are able to produce and show that there is return on investment. We spoke, Bokang mentioned ethical. So it's quite an ethical business that they're trying to actually present, both by the investor and also by the farmers themselves. So when we look at that, there's many opportunities in terms of recovery and reconstruction that CSOs can also take advantage of. And some of them are looking at opportunities that are always coming out in terms of the forecast of new opportunities, but leveraging in terms of dialogue, in terms of other partnerships as well, not working in silos, knowing who are your partners, who are your alliances, and form those kind of alliances with government, and knowing what their budgets are, what is the country operational plans for that particular sector, so you know where to tap into your resources. When I talk about partnerships, we find that a lot of organizations are unaware, even farmers themselves, of who is doing what in the same sector. So that is why when I speak about finance, it comes with education or knowledge. It goes hand in hand. Without one, the other can't survive. And that's the only way that we can have a successful business model in terms of recovery and wanting to go and shift into a whole new direction that is going to be sustainable. Organizations also need to look at intercontinental collaborations. We need to find internal or global markets that can feed and support us and help us reach our potential. Tap into expert skills and allow them to also help us in terms of mentoring, business tools, and so forth. There's a lot that we can learn from global best practices, global models, and also opportunities that are available. Like I said at the beginning, there's a lot that is, a lot of opportunities are now being shaped and crafted to include organizational capacity needs, internal mechanisms, in growing your intellectual capital, your human capital. So we need to take advantage of that sector and be very strategic of how we align ourselves, who our partners are going to be in terms of impact investment. So when we start exploring these kind of landscape, we basically have a package of services that we're going to be offering. We have a very good idea of how this value chain is going to be working and what we want from the market at the end of the day when we talk about reconstruction. We want this particular sector, if we're talking about agribusiness, especially for women, we want to be exposed in terms of the value chain, in terms of the market chain, so that they have more opportunities in terms of selling goods, looking at an income, looking at a profit, and how they can scale it up. So not just having a small holding and not being able to scale it up, or show the funder that they have the skills, they have the capabilities, they have the bandwidth that they're able to do it. And that at the end of the day is going to turn into profits. And we spoke about the staffing, laborers, it all has a knock-on effect. So at the end of the day, recovery, reconstruction, we are literally just trying to break that glass ceiling and trying to make headway, especially for women in agribusiness. If you just take a bird's eye view in terms of the value chain, women play a very big role in production at the start of the value chain. But as you go further down into that, you see that their input, their involvement tends to taper off, and men start to have a much bigger involvement just because they have more access to these resources, tools, finance, land, capital, machinery, and so forth. And they don't have that. So they start to taper off, and then men take over. That's again where we're seeing the disparity. So reconstruction, recovery, it has to come in with a very broad lens that is going to talk to all these different pieces in terms of the sector. Thank you.
I'm just nodding and cheerleading from the side. I'm in total agreement, but yes, as the sequence goes, Bokang.
Yeah, you know, it's about an inclusive future, right? And having all stakeholders conform to what that demands of us as individuals, as collectives, as organizations, as companies, as the private sector, as government agencies, as national departments, and as government overall. So what we've seen in the past, for instance, if we take the Malaba Declaration, right, where one of the commitments is that 10% of investment, or rather of the national budget, must be invested in agriculture. And we've seen how countries have really struggled to conform to that sort of stimulating economic growth objective. So now when we start to then layer that with inclusivity, it starts to complicate the conversation. But the reality is that the innovation that we seek to get out of this economic rut is found in the very rather communities that are often excluded from policy decision making, that in sort of market development that the private sector does, that they often sort of neglect the bottom of the pyramid. But therein lies the innovation, therein lies the ingenuity to survive hardship, you know. And oftentimes, you know, we need to sort of also do away with the mindset that determines that because a person doesn't have an education, because a person is poor, that necessarily that means that that person does not carry the ingenuity to take us into a new space, into a new level of existence. So those attitudes also, along with sort of the technical aspects of capacity building and what have you, those attitudes really we need to do away with them. They've not served us well at all. We've seen now through this pandemic that neglecting the needs of those at the bottom of the pyramid have really frustrated our ability to contain the virus, have really frustrated even the government's ability to cope with the demands of on the infrastructure. And so some of those things really just lie in having just a literal paradigm shift. So indeed, to Sharmala's point, is that CSOs need to be more visible, need to continue speaking up on these issues so that we can have that paradigm shift that will support and sustain all the innovation and all the ingenuity that we require to be able to break out of this rut. And you know, one of my ambitions really for reconstruction is being able to have you know, where decision making in the decision making structures, being able to have a situation where it feels incomplete, it feels it literally feels wrong to not see enough representation from women, you know, to have, when we see these platforms, when we see them advertise that this is the work that they're doing, these are the investments that they're making in the space, that we start to shout and scream and say, how come there aren't any women? If women make up the majority of those who are farmers, why don't we see them represented in these investment schemes, or represented at ministerial level, or represented as fund managers, you know, so that every time we spot opportunities for growth, that we also question whether it's representative, whether it's inclusive, you know. And we can't tire from doing that as SCOs and NGOs, because when we stop crying foul, you know, then the foul continues, you know. So those are and so those are the key sort of things from what undergirds the reconstruction. But also the reconstruction becomes a function of the reality of how much money is there to actually rebuild and build back better, right? All of these things require real sort of, you know, a sophisticated approach in being able to unlock value going forward. I mean, an example, for instance, is around a community that I just learned of recently, that there's the refugee communities in Rwanda and in Kenya are experiencing microfinance investment, and the repayment rate is at levels above 90%, right? Who would have thought that a refugee entrepreneur is able to make their payments and as a collective at as high as those levels? We don't even collect that much for tax in South Africa from companies who report profits, right? And so you start to see that there's real value in bottom of the pyramid, and there's real opportunity for innovative financial inclusion for those at the bottom of the pyramid. And so one of the reconstruction is about making sure that those at the bottom of the pyramid were able to show credibility, were able to show a consistent cash flows to pay back loans and any other such investment, that they are afforded the opportunity to grow. And so financial inclusion becomes one of the key themes for me in reconstruction, right? And ensuring that and broadening its reach and not just in sort of more high GDP markets like South Africa and Bokang and the like, but really across the region, that we start to see an uptick in financial inclusion. So I'll stop there. I have a lot on my mind about this issue, but I'll stop there.
Hopefully we get to pick as much of your mind as possible in the short time that we have. But from both of you, understanding that, one, there needs to be inclusive reconstruction, right? That reconstruction cannot be isolated to certain activities or people or sectors. But also, I'm getting that there is a need for the interlinking of different organizations. Sharmala speaks about state and the NGO, the intercontinental cooperation. And you also, Bokang, speak very poignantly about the gains that are to be made by the people that are at the so-called bottom of our society, right? And how much they can actually add. And that is usually the place for CSOs. When we look at the people who don't form part of society as comfortably as other people, such as women, right? That is usually the space for your CSOs and your NGOs. So now, given that, how then does the CSO promote or leverage impact investment for sustainable development? How does one get the funding, use the funding, promote the funding? And I think Bokang has kind of touched in it, that there needs to be a show of sustainability in the NGO itself and its ability to repay loans and things of that nature. But I just want us to dive deeper into that conversation in terms of where do CSOs go from here. I'll go back to Sharmala, since the order has been dictated to me. I'll accept this bullying. But yes, Sharmala, if you can assist.
No problem. So I think just to just to open up with what Bokang has said. So, there's a lot of research that's being done in terms of agribusiness, CSOs, impact investing, and how do they sort of collaborate, intertwine, and how do they sort of complement each other. But to start off that and kick us off in terms of CSO leveraging that space, in terms of the research that's done, alone in the sub-Saharan Africa, gender inequality cost us at least an estimate $95 billion a year. And there are currently 187 million women-owned businesses worldwide, including many in the agricultural sector. So just looking at that stats and hearing it out loud, we always ask ourselves, so where, like Bokang says, where are these women-owned businesses? Where are women in agriculture? I mean, why is the disparity so big? So when we're looking at investments, especially for CSOs and what they're going after, from an investment point of view, I think, it needs to have a stronger gender lens in terms of closing that gender inequality, because it's really costing globally quite a bit. We need to empower and look at CSOs and how they are positioning themselves strategically for going after certain opportunities. So there has been talk also in terms of organizations that needs to be vetted, organizations that needs to come forward and prove in terms of sustainability, ethics, good governance, good accountability, having strong financial internal mechanisms as well to position themselves to actually leverage and promote the services that they are wanting to sell or even procure. So it's very important for CSOs to actually restart polishing themselves and re-looking at the landscape and putting on together a complete different hat on thinking of how to tap into these resources. Because you've got to be creative, you've got to be innovative. And we keep talking about leveraging the digital platform as well. We need to show that there is use of such platforms and they understand the use of it, that there is strong M&E systems, because at the end of the day, there has to be return on investments. So if we look at how the success is being laid, in terms of the active and substantive participation of all stakeholders involved, from government, the private sector, civil society, international organizations, they're all extremely key role players to make sure that the one sector benefits from the other. I've also mentioned during our conversations in terms of looking at working with other consortiums, other partners. Let's learn from others and use best practices in terms of what works best and not reinvent the wheel. We also need to make sure that education goes right down to grassroots levels, grassroots organization. When we look at agribusiness, we need to be educated in terms of environment, in terms of the environment, climate changes. How does that impact our market chain, our goods? How does that impact the costing of our goods, the labor that we are recruiting, the kind of land that we're using? So it's a very big basket that we need to look into. And CSOs now need to very quickly shift gears on how to actually leverage and sort of take advantage of this landscape that is completely under new architecture. And they need to find a way of finding themselves in that space of where they're going to be pivoting and having a solid role and be taken notice of. So they must come out with a strong voice. There's also a lot of networks that are being created. GMT itself has women in agribusiness. So we need to also leverage on those kind of networks and use that kind of intellect, knowledge-based information sharing platforms on how we move forward as a collective effort in one voice. So we don't go disjointed in the sector and come across that we know what we're doing, but actually it's in bits and pieces. So when it comes right down to that granular level where we need to see the impact on the farming and in terms of that value chain in supply and demand, we don't see the connection. And then we only have ourselves to blame. So we need to make sure when we talk about collaborations, when we talk about concerted efforts, and how do we maximize our efforts in going forward for these opportunities, let's do it in one voice to make sure that we have basically summed up the landscape. We have a good understanding of what the expectations are, what's the deliverables, what's the duration of this funding opportunity. Can we deliver? Let's be pragmatic and very realistic as well. over and above the expectations on both sides. Thank you.
Now, I just wanted to highlight that Ms. Sharmala said that patriarchy is expensive. You heard it here first. It is expensive to the economy. And Bokang, if you have anything to add.
Yeah, I'd just like to echo the point about collaboration and going into the right partnerships. It's so important that we develop communities of trust, because within those communities, then we're able to, that saying that there's strength in numbers. And now more than ever, is there no room for individualistic sort of ideology. We really need to move in go into community, because in sharing our burdens, we're able then to sort of move further in fighting for being able to accrue greater benefit from the society that we live in. And so quite practically for CSOs is, those within a particular thematic area to come into communities of practice and discover what they can do collectively around those issues that can generate income or be able to attract investment. And within those communities, you're then able to learn what the different strengths are, and you find that the technical assistance that you've been longing for has always been within this network. But because you've been isolated, you miss out on the opportunities for growth. So it's very important that that one moves into community so that you can identify the opportunities that come in your collective strength. So that's very important. And also to Sharmala's point around education, is about having the right idea about the business model that works for your organization. And so having the right skills to be able to determine what are the risks that your organization faces, and having the right competencies to overcome those risks, So that's the one element around the need for that internal capacity building. But also that with regards to learning the different business models, when you look at sort of the investment process, just a generic investment process, whether you are a venture capitalist or whether you are a much larger private sector organization or corporate and so on, there are certain principles that apply across the board, regardless of whether you have a much higher social return or whether you have a much lower financial return. There are certain things that are just fundamentals in being able to get right. And one of those things in terms of investment is being able to manage your credit risk. And what that means is that if I give you money, will I be able to get it back? When will I be able to get it back? Will it be, how much of it will I get it back? And that's essentially what most investors are interested in. And we want to create that incentive for them. And so it's about going into understanding your business model and understanding that how will I be able to generate that return? And really have a clear plan or clear, dot all rather line all the dots to be able to have a very clear vision of this is how we're able to generate return on investment. And from that, you're then able to move and be flexible on when circumstances change and they frustrate or they delay your ability to generate that return, that you're then able to then go back and say, this is how we need to adjust. Because that's one of the things that the investors are looking for, is looking to understand that it's not that there aren't going to be any challenges, but that when they come, are you ready and able to confront them and overcome them? And so really that's what an investor is looking for in an investee. And so if you can get those sort of fundamentals right, as a collective, right, that starts to take on many options. It could be a loan, it could be just a a savings group within your community. It need not be from a bank per se. And also it could be a strategy where you start small, whether it's you're each collecting 2 rands, and it graduates into being able to attract thousands or even at a later stage millions. And so time is also a very key factor in investment, is that what is possible over what time period, and having that clear sense of what we will achieve in the next 6 months, in the next year, in the next 3 years, also is one of the ways that you're able to reassure your investor that the money that they give you, one will generate these returns over this period and to this extent. And so those are some of the things that as CSOs we need to start to becoming more acquainted with, and also not to be shy to ask and move into community to learn. And it need not be something that you develop from an out of pocket, always having to pay for a workshop or pay for a training, but it could be just something that when you move into community, you discover that each of you know different things about the same topic and are able to then collectively move yourselves forward. So that would be my advice, we'll say, to CSOs in terms of how to leverage or how to practically move into the impact investment space.
Got it. Okay. So from what I'm hearing, people need to understand their landscape. People need to understand their mission, their deliverables, if they can deliver it. People need to collaborate, not only across far and wide, but even if they start small within their own communities, they can build a group for themselves and move forward in that regard. But now, I guess, just condensing all of that and also making it specific to your smallholder farmers and the CSOs who are working with them. What are like your top 3 actionable steps that they can take from henceforth in this regard? Ms. Sharmala.
Yeah, so I would say there's a couple, but it also culminates quite nicely with the conversation and the feedback that Bokang and I has been sharing. So it's some of it is going to be a repetition, but on a very high level overview in terms of some of the critical steps that they can start looking at, I would say is combining finance with knowledge, looking at the spirit of partnership. It's clear evidence, history has shown us that when we start having open dialogue, sharing resources and knowledge, it opens opportunities, it deepens the discussions, and it promotes consensus building and partnerships with key stakeholders on these issues. So it is vital that we embrace that. And while we're navigating through these kind of things, also to embrace the potential of technology to make their businesses more competitive and relevant. Bokang was also speaking, spoke very well in terms of what investors are looking for in terms of return on investments. And one of the things that we see coming a lot in terms of funding opportunities is the potential to be scaled up. What kind of sustainable business models are they using? Is it affordable? And is it showing and providing positive return on investment, especially at smallholder farm level? So looking at piloting those opportunities or piloting their projects, scaling our partners, and looking at higher volume productions. So that basically will drive down prices at the end of the day. One of the other key takeaways for CSOs in terms of investment, impact investment, and also how to nurture and approach the funding landscape is to know who your investors are. And you are also, in terms of their strategic partnerships, forming alliances, forming networks, being part of networks. In terms of government, they all have agri departments, the Ministry of Agriculture and so forth. We need to understand what is their strategy, what are their rollout plans for the government, what are the country operational plans that has been approved with their budgets for this particular sector. And CSOs, like I've mentioned before, and I will reiterate it because we find this as being a stumbling block for most, is to get yourself on the map, make yourself visible, be relevant, be competitive in what you are doing. Leverage of what is already there, don't reinvent the wheel. As much as we can say that, and it's in principle, it sounds easier said than done. But once you really start to unpack what you have and getting rid of non-essentials will actually make you more leaner and more competitive, where you can move fast and you can navigate and you have a clearer vision of what is it that you want and how you're going to get it. And once you find yourself in that mind space, including your staff complement, that you're all moving towards the same vision and mission, you will be automatically attracting these kind of donors and investors to you without even having to do a heavy lift. It's just because you become so knowledgeable, you're reputable, you are doing the kind of work that investors are looking for, you are making an impact, you're right down in terms of grassroots, and you're making a difference in society. So when we talk about social returns, that is one of the places where investors are going to be really looking keenly with a magnifying glass to see, is this something that we want to invest in? Does it align to our focus as well as a company? Does it align to the focus of our employees? So we don't ever work in isolation. We've got to take all these factors into play, even right down to rural farming, to small holdings. The exact same strategy, like Bokang has mentioned, the mechanisms are basically the same. It's just that we are working under different environments, different landscapes, but at the end of the day, the guiding principles are all the same. So in conclusion, that would be kind of my main key steps and key takeaways for CSOs. Thank you.
Thank you. Bokang?
I totally agree with what Sharmala has expressed, and truly have nothing more to add. I think one of the things, though, that I'd like to sort of highlight is that smallholder farmers are similar to startup, or small businesses. And so I think for me, my encouragement to them also is that to take yourself seriously. I think that's very important, that you're just as eligible as the guy who has a KFC franchise, and so to really take yourself seriously and to start to adopt practices that make your organization robust and that it can last. I think so that's one of the key things, and also plugging into some of the policy issues that can help you grow, like for instance what we have now with the Continental Free Trade Agreement, is that plug into that, find out more, make a demand on your local municipal representatives and even on the local CSOs to help you become more empowered in understanding how these opportunities can help you unlock more markets, and how will you be able to overcome. Unfortunately, where we stand as smallholder farmers is that there's not enough attention and the right attention being given to smallholder farmers. And so a lot of the work is cumbersome, it's bootstrapping, but within that, do you then sort of develop skills and competencies that allow you to have a more sustainable business? And so it's very important to not despise the small beginnings, in order to be able to know that this is how these things are foundation to being able to graduate to greater levels of impact. And yeah, your mental health well-being is also just as important. And so it's part of going into community is being able to share the burden and also offload some of the challenges that you guys face. So I think it's that and also in the CSO space that we face. So I think it's also important to recognize that mental health is just as important.
Thank you so much. I think that we've all just taken so much away from this discussion, especially in terms of just where we need to be going forward. So thank you, Ms. Bokang. Thank you, Sharmala. Thank you to the audience that has remained with us during this time. Thank you to everyone watching, whether it's live or will be watching at some point in the future when they find themselves trying to figure out what to do in the middle of this crisis or at the end of it, we hope. The key things I think that we ought to be looking at and taking away is the fact that, one, there's a new order of the day. We're not going to be tapping into our normal sources anymore. Most of them have dried up. Most of them are just tired. So we need to forge a new way. And in forging a new way, we have come to realize that, as the saying goes, when all the trees are gone, they will know that they can't eat money, right? So impact is what we need to be making, not only for the people around us, but for the world that we live in. And so money is going to be spent differently now. It's not only for a project, but also for the people that for which the project is for, the environment for which the project is for, which our speakers have drawn us to so eloquently all the time. And in going there, what is how do we get there? What shoes do we put on? One, we need to collaborate. Collaborate has been the theme of the day. Come together, speak in one voice, and also collaborate, whether big or small. We're pushing to intercontinental spaces, but even in our communities, we must collaborate. Take ourselves seriously, as Ms. Bokang so puts it. Understand where we're working, the landscape in which we're working, what we want to deliver, and whether we, in our current space, can deliver that. Is something else that we need to be looking at. And for me, my favorite catchphrase that came out of this: discrimination is expensive, so let's take each other seriously as well, wherever we are and whatever we do. Thank you once more to everyone who came. Thank you to our speakers, and look out for the next webinar in this series. I'm sure that the Southern Africa Trust will be communicating it through its various social media platforms. So look out for that. We so look forward to another discussion, and thank you for having me once more. A good day to you, and health and wellness to everyone watching. Thank you.
Thank you so much. Thank you.